Hello, this is John Piper with the weekend video clip and also part one of the December technical trader, and it's Saturday the 14th of December. We're going to start today with a chart from Bill Adlard. Bill's taking a bit of a back seat in the markets at the moment. He's posting some excellent videos on YouTube of his guitar playing abilities, which are quite phenomenal. Just search Bill Adlard on YouTube to see what I mean. This is a long-term chart going back to 1928. This is the 929 peak. This was the 33 low, I believe, not quite certain about that. And you've got pretty clear 5 waves here, which I said I'd outline in my report the other day. So we've got 1 there, 2 there, 3 here. The Beatles sung Help around here, I think, 1966, I believe. Sideways drift there as a 4th wave, and we've now got this 5th wave taking us into the current day. Pretty clear there's a 3rd wave here, so 4 here. Quite what the zigzag is, it's a little bit more confusing perhaps. That's about actually no, sorry, there's a 1, 2 here, and there's another 1, 2 here, and that's a 3, and then a 4, 5. So basically there's a pretty valid count suggesting that there's a major peak, and we've got lots of these blue lines are GAN clusters, and you'll see how successfully they captured the 1960s to 1970s bear market, which was a pretty massive bear market. I mean, the FTSE, not the FTSE, the FT30 went down to, I mean, there was a huge banking crisis, NatWest almost went bust. I was doing articles at the time with a chartered accountant, wasn't really involved in the market. I don't recall knowing much about what was going on, in fact, but at that stage in my career, but it was there were I think Jim Slater was indicted in Singapore at the time, a whole lot of stuff going on, and we've now, I mean, this move here was the pre-war years, so you had sort of Nazism, all that kind of thing, again very serious stuff, and we've now got, I mean, Elliott terms, if this is a 5th wave, then we'd expect a bear market to be more severe than the 2 that went before it. So this chart is significant in the sense of what could be to come, but I think it's a mistake to be too pessimistic, or indeed optimistic. It's best to be realistic. And anyway, we can see that we've again the GAN clusters that Bill has put through here so far have been incredibly useful. They're created by not looking at not going from 0, but going from the highs, as I understand it. This chart could be an incredibly useful guide. Right now we're knocking on the upper trend line. Now there are other trend lines I've discussed, but I think this particular chart it gives us another cause for concern, really. I mean, again, at the end of the day, all these lines are only indicative. What's important is what happens at the lines. They don't say this will happen or that will happen. It's what does happen that we need to be paying attention to. So if we see the market pull back from current levels, which it seems quite prone to do, I mean, we are actually in the Christmas period. Markets aren't going anywhere, which is unusual. So there's some major tide in place, which is stopping the markets going higher at the moment. Now, it doesn't mean to say for example, we have some news next week from the Fed. It could be that news will propel markets higher, although there are indications we should be going higher in any case. But let's have a look at that now. I think we've had, the chart, Bill's chart is an excellent chart. Let's go on to shorter term charts now. Okay, here's a weekly chart. These lines here are shorter term trend lines, which, I mean, it's all quite long term, but not nowhere near as long term as the GAN lines we're looking at a minute ago, which have again caught the peaks quite significantly, and let's expand. This is the hourly chart. So we've got this peak here around 16180 thereabouts. 5 waves down. I've discussed that. A, B, C. This has now started to fall away. We've now got more impulsive action. Sideways drift. Just doesn't seem able to push higher at the moment. We could see a bit of an upside. We've got expiry next week on the 20th. Then of course we've got Christmas itself, and we've got the New Year. The chart isn't looking very optimistic at the moment. We could easily see a bit of upside, but whether it'll last as long as the New Year remains to be seen. At the moment, my tendency would be to put an extreme stop below there. Just need to see the action on Monday, really. But I want to be on this, but on board. If we're going to fall further, then it could be significant. We want to be on boarded, obviously. An extreme stop is a way of guaranteeing that. No free lunches, of course. You don't always catch positive moves, at least moves that make money. I mean by that. But right now, though, I mean, one other aspect is could be an ABC. I mean, maybe we've seen this pullback from this huge resistance we've been looking at, and maybe that's all it can do. In which case, that would be very positive. But there's no real sign of that right now. Also worth pointing out that this rally, which started on Thursday, is a very short-term affair at the moment. That's an A, it could be a B, this could be some kind of C developing. It's not looking terribly encouraging, I must admit, but certainly there is that support level there, and so an extreme stop below there may make a lot of sense. Be better if we saw a bit more upside first, just to confirm that there is some kind of significant rally. What you don't want to do is be caught out by a fifth wave. I mean, that was some kind of fifth wave, just reversed. Obviously, a false break is not what extreme stop's all about. Right, have a look at FTSE now. Well, I mentioned the 200-day moving average in one of my reports last week. This red line is that average. You'll see that in the last two penetrations, I think it does go back further, but these two illustrate the point. So in June we saw a decent penetration, bounce back, solid rally ensued. Similarly in October, bounce back, solid rally ensued. So again, it's possible we might see the same here. We certainly have an Elliott count. It's also of interest here. I'll keep it on the daily chart for now, but there's a sort of A here, there's a B here, then we've got a 1, 2, 3, 4, 5. Let's look at a bit more detail. This is quite an interesting chart, in fact. This is the first leg down. You'll see it's pretty corrective. There's also a bit of a triangle building up here. So I would count that as an A to there, possibly. Then a B maybe to there as the triangle finishes. But if we then look at the point here and just expand that, we can see we have a very clear 1, 2, 3, and the 3 subdivides into 5, which is always nice. 3, corrective 4, and now another 1, 2, 3, 4. So what we might see on Monday is a bit more downside just to complete this pattern, and then a rally come in. In that case, then it depends on the form of the rally. If you see a strong rally, then that would suggest maybe we have just seen a correction. And that remains to be seen. Slightly different on the Dow, where there is a more negative pattern, or at least potentially so. Currently just an ABC. Right, we're just going to have a quick look at gold and the currencies before concluding this report. Right, well, gold's been trying to bounce around 1200. Did in fact manage to bounce. It's now retesting. It's all looking a bit dreary. Not much more to say there. So this is pound euro, the hourly chart. We've seen a peak here. We have got a possible 5 waves here. The sharpest bit's there. So if that's a 1, 2, then the sharp bit 3, 4, 5. There's a 1, 2, and a 1, 2 before that. Now the only problem with this is that we've also got 5 here. 1, 2, 3, 4, and a 5. So it's possible that this is actually it could be a B wave or it could be a 2 wave. So the count would be A, B, C. Alternatively, let's get rid of all the arrows, it's rather confusing. It could be a 1, 2, then a 3, with a possible 4 coming in, but then it's quite a short. So at the moment it's looking a bit either. It could be either way basically, and it may pay to watch a little bit longer. Right, pound dollar has now fallen back rather. It's gone back below the trend line again, in fact, but just. I mean, it could be a retest of the trend line. Let's look at a bit more detail. So we have a more significant fall from here. The high came in around 164.70 thereabouts. Not a terribly clear count, but looking more impulsive than it was before. I still think there's a pretty fair chance that pound will fall against the dollar. Just want to looking for the entry opportunity at this point. Okay, that's all for today. I hope you found it interesting and useful. Somewhat longer report than I'd really intended, but quite a lot happening right now. And as we enter the new year, this is when things can change quite dramatically. So it's just a time to pay attention. Even if December itself can be a bit of a pain in the neck with sort of holiday trading type conditions. Anyway, have a great weekend. Thanks for listening, and bye for now.